In a landmark move, the U.S. Securities and Exchange Commission, or SEC, has approved the listing of a spot Ether, ETH, ETF, marking a significant advancement in the cryptocurrency investment landscape. This approval is seen as a pivotal moment, as it not only validates Ethereum but also opens new avenues for institutional and retail investors to gain exposure to Ether through traditional financial instruments. The approval process for a spot Ether ETF has been a long and complex journey. Leading the charge, BlackRock, the world's largest asset manager, along with other major financial institutions like Fidelity and ARK Invest, filed applications for the spot Ether ETF. These applications were scrutinized rigorously by the SEC, with numerous rounds of feedback and requests for additional information. The SEC's primary concerns revolved around market manipulation, custody solutions, and the overall integrity of the Ether market. By addressing these concerns through comprehensive risk management strategies and transparent operational protocols, the applicants managed to convince the SEC of the viability and security of a spot Ether ETF. The approval of a spot Ether ETF is a game-changer for several reasons: accessibility and convenience. Investors can now gain exposure to Ether without needing to directly purchase and store the cryptocurrency. This is particularly appealing to those who are wary of the complexities and security risks associated with managing digital wallets and private keys. Institutional validation. The SEC's approval lends significant credibility to Ether as an investment asset. Institutional investors, who may have been hesitant to invest in cryptocurrencies due to regulatory uncertainties, now have a clear and regulated pathway to include Ether in their portfolios. Market growth and stability. The introduction of a regulated ETF is expected to increase liquidity and reduce volatility in the Ether market. By attracting a broader base of investors, the ETF can contribute to more stable and sustained growth in Ether's market value. The SEC's decision is not only a win for Ether, but also sets a precedent for future cryptocurrency ETFs. The approval could pave the way for other crypto assets to be offered as ETFs, further integrating digital currencies into the mainstream financial system. Moreover, this development comes at a time when global regulatory environments are becoming increasingly favorable towards cryptocurrencies. Countries like Canada and Brazil have already launched Ether ETFs, and the US approval is likely to influence regulatory bodies worldwide to consider similar approvals, fostering a more inclusive global crypto market. Despite this milestone, the journey is far from over. The crypto market is still subject to significant regulatory scrutiny, and the SEC has indicated that ongoing monitoring and adjustments will be necessary to ensure the continued integrity of the ETF market. Additionally, the classification of Ether itself remains a topic of debate. While the SEC has allowed the ETF to proceed, there are still unresolved questions about whether Ether should be classified as a security, which could have implications for how it is regulated in the future. In conclusion, the approval of the spot Ether ETF is a monumental step forward for both Ether and the broader cryptocurrency market. It enhances accessibility, provides institutional validation, and contributes to market stability. As the crypto ecosystem continues to evolve, this approval signals a promising future where digital assets become integral components of the global financial landscape. Investors and stakeholders will be closely watching how the ETF performs and its impact on the market, anticipating further innovations and regulatory developments in the ever-dynamic world of cryptocurrencies.